Based on the historical data and forecast, Bitcoin shows a strong uptrend, consistently hitting new highs and trading near the upper Bollinger Band. The RSI is fluctuating between 69 and 77, indicating bullish momentum but not yet in overbought territory. Given this scenario, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. We will implement a long position when the RSI dips slightly below 70, aiming to capitalize on pullbacks within the broader uptrend. Specifically, enter a long position at $104,400, placing a stop-loss at $103,500 just below the recent support and the lower Bollinger Band. The target price is set at $105,200, aligning with the forecast for May 19th and 20th, 2025, and allowing for a reasonable profit margin. To further refine the strategy, we will incorporate the Bollinger Bands. If the price approaches the upper band, we will consider taking partial profits to secure gains. This helps manage risk and allows us to re-enter the market if the price pulls back. The overall portfolio will be 70% focused on the RSI strategy, 20% on Bollinger Bands, and 10% on support and resistance levels, creating a balanced and adaptable approach to maximize returns while mitigating potential losses. This combined strategy aims to capture the ongoing uptrend while incorporating risk management techniques for optimal performance. Based on the historical data and forecast, Ethereum demonstrates a strong uptrend, particularly evident in the price surge from May 10 onward. The RSI consistently moved above 70, indicating overbought conditions, but the price continued to climb, suggesting strong bullish momentum. The Bollinger Bands also widened, confirming increased volatility and a potential for further price movement. Considering these factors, I recommend a long position strategy focused on capitalizing on this upward trend. We will implement a tiered entry strategy, taking advantage of minor pullbacks to optimize risk-reward ratio. The first entry should be at $2,550, coinciding with the first forecast price. Place a stop-loss order at $2,490, just below the recent support level and the previous day's close. The initial target price is $2,620, aligning with the next forecast price. If the price reaches this target, we will move the stop-loss to the entry price of $2,550 to secure profits and reduce risk. For a second entry, if the price retraces to around $2,670, we can enter a long position with a stop-loss at $2,610 and a target price of $2,740. This strategy combines RSI signals, Bollinger Bands confirmation, and support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast predicts continued growth. The RSI indicates that XRP is currently in a neutral to slightly overbought territory, with values fluctuating between 53 and 69. Considering the support price of $2.35 and the resistance price of $2.58, we will implement a combined strategy incorporating RSI and Bollinger Bands to maximize potential returns. Our strategy will be a portfolio with 3 positions. First, we will initiate a long position when the RSI drops below 46, targeting the $2.58 resistance level. The entry price will be $2.35, with a stop-loss placed at $2.3 to protect against potential downside risk. Second, we will enter a long position when the price touches the lower band of Bollinger Bands, with an entry price of $2.02, a stop-loss at $1.99, and a target price of $2.5. Third, we will enter a long position when the RSI is above 60, with an entry price of $2.54, a stop-loss at $2.47, and a target price of $2.7. This combined strategy leverages the strengths of both indicators to capture potential gains while minimizing risk. Based on the historical data and forecast, BNB exhibits an overall upward trend, supported by consistently breaking through resistance levels and the forecast predicting further gains. The RSI values fluctuate, but recent readings above 60 indicate strengthening momentum. Considering the Bollinger Bands, the price has recently moved outside the upper band, suggesting a potential overbought condition, but the forecast maintains a bullish outlook. Therefore, I recommend a long position strategy with a focus on capitalizing on the upward trend. Entry price should be $659, placing a stop loss at $650 to mitigate potential downside risk. The initial target price should be $672, aligning with the forecast for May 21, 2025. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, consider entering a long position at the prevailing price, setting a stop loss at $648 and a target price of $670. Conversely, if the RSI rises above 80, suggesting an overbought condition, consider exiting the current long position or shorting BNB at the prevailing price, with a stop loss at $674 and a target price of $650. This dynamic approach combines trend following with momentum indicators to optimize returns while managing risk effectively. The final portfolio will prioritize the long position with an entry price of $659, a stop loss of $650, and a target price of $672, adjusting based on RSI signals as they appear. Based on the historical data and forecast, Solana shows a clear uptrend, breaking through the resistance level of $183 and continuing to climb. The RSI consistently fluctuates above 50, indicating bullish momentum, with values reaching over 77, nearing the overbought territory of 80. The Bollinger Bands also support this trend, with the price consistently trading above the middle band and occasionally touching the upper band. Given this, I recommend a long position strategy. Entry price should be $179, leveraging the initial forecast price. A stop loss should be placed slightly below the support level at $172, setting it at $171 to avoid premature exits due to minor fluctuations. The target price should be set at $187, aligning with the forecast for May 21, 2025. To refine this strategy, we can incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, consider entering a long position. Conversely, when the RSI exceeds 70, signaling an overbought condition, consider taking profits or tightening stop-loss orders. Combining this with Bollinger Bands, if the price touches the upper band, it suggests a potential pullback, so consider reducing exposure or moving the stop-loss closer to the entry price. The final portfolio will be a long position with an entry price of $179, a stop loss at $171, and a target price of $187, adjusted based on RSI and Bollinger Band signals for optimal risk-reward management. Based on the historical data and forecast, Dogecoin shows a clear upward trend with recent volatility. The price has been oscillating between a support of $0.206 and a resistance of $0.251. The RSI has been fluctuating, briefly entering overbought territory above 80, but generally remaining within a reasonable range. The Bollinger Bands indicate periods of increased volatility, but the recent narrowing of the band suggests a potential consolidation phase. Considering these factors, I propose a strategy focused on capitalizing on the upward trend while managing risk. My recommended strategy is a combination of RSI and Bollinger Bands. I will initiate a long position at $0.229 when the price approaches the lower Bollinger Band. The stop loss will be set at $0.206, just below the established support level, to limit potential losses. The target price will be $0.251, the resistance level, aiming to capture a significant portion of the upward movement. This strategy leverages the RSI to identify potential oversold conditions near the lower Bollinger Band and uses the support and resistance levels to define risk and reward parameters. This approach balances the potential for high returns with a defined risk management framework. Based on the historical data and forecast, Cardano shows a generally upward trend with periods of consolidation. The RSI fluctuates between 46.9 and 73.4, indicating both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the support price of 0.783 and resistance of 0.841, I propose a strategy focusing on capitalizing on short-term pullbacks while respecting the overall uptrend. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. The strategy involves entering long positions when the RSI falls below 30 and the price touches the lower Bollinger Band, confirming an oversold condition. For example, if the RSI dips to 28 and the price reaches $0.801, we enter a long position with an entry price of $0.801. The stop loss will be set just below the lower Bollinger Band, for example, $0.79, to protect against a potential reversal. The initial target price will be the resistance level of $0.841. If the price reaches $0.841, we take partial profits. A second target price will be set at $0.85, based on the recent Bollinger Band expansion. This combined approach leverages multiple indicators to enhance the probability of success and manage risk effectively. Based on the historical data and forecast, TRON shows an upward trend with consistent price increases. The RSI indicates that TRON is approaching the overbought level, currently at 71.7, suggesting a potential pullback or consolidation. However, the forecast prices predict continued growth, reaching $0.286. Considering the support price of $0.257 and resistance price of $0.298, I recommend a long position strategy. Entry price will be $0.273, with a stop loss at $0.265 to protect against a potential pullback. The target price will be $0.286, aligning with the forecast and resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is nearing the upper band, which often signals a potential reversal. Therefore, we will implement a slightly conservative approach. The entry price remains $0.273, but the stop loss is adjusted to $0.268, just below the lower Bollinger Band. The target price is set at $0.283, a more achievable target considering the potential for a short-term consolidation. This combined strategy leverages the upward trend, RSI readings, and Bollinger Bands to maximize potential returns while mitigating risk. Based on the historical data and forecast, SUI exhibits an overall upward trend, supported by consistently breaking through the resistance level of $4.12 and the forecast prices remaining above $4.10. The RSI values have been fluctuating between 62 and 76, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.94. The stop loss will be set at $3.56, coinciding with the support level, to limit potential losses. The initial target price will be $4.14, aligning with the forecast price for May 15, 2025. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider adding to the position at $3.56. Conversely, if the price touches the lower Bollinger Band, it could also present a buying opportunity at $3.07. If the price reaches the initial target of $4.14, we will move the stop loss to the entry price of $3.94 to protect profits. A secondary target price will be set at $4.22, based on the historical upper Bollinger Band levels, to capture further upside potential. This layered approach combines trend analysis, technical indicators, and risk management for a high-return investment strategy. Based on the historical data and forecast, Chainlink shows a clear upward trend. The price has consistently bounced off the support price of $16.1 and approached the resistance price of $17.4. The RSI values have fluctuated, but generally remained within a range that suggests continued bullish momentum. The forecast for the next week predicts a continuation of this upward trend, with prices reaching $17.5. Considering these factors, I recommend a long position strategy. Specifically, I propose entering a long position at $17.1. Given the recent upward trend and the RSI readings, this entry point offers a favorable risk-reward ratio. The stop loss should be set at $16.1, just below the established support level, to limit potential losses. The initial target price should be $17.4, the current resistance level. If the price breaks through $17.4, the target price should be raised to $17.5, aligning with the forecast. This strategy combines technical analysis using RSI and Bollinger Bands with price action analysis based on support and resistance levels to maximize returns while managing risk effectively. Based on the historical data and forecast, Bitcoin shows a strong uptrend, consistently hitting new highs and trading near the upper Bollinger Band. The RSI is fluctuating between 69 and 77, indicating bullish momentum but not yet in overbought territory. Given this scenario, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. We will implement a long position when the RSI dips slightly below 70, aiming to capitalize on pullbacks within the broader uptrend. Specifically, enter a long position at $104,400, placing a stop loss at $103,500 just below the recent support and the lower Bollinger Band. The target price is set at $105,200, aligning with the forecast for May 19th and 20th, 2025, and allowing for a reasonable profit margin. To further refine the strategy, we will incorporate the Bollinger Bands. If the price approaches the upper band, we will consider taking partial profits to secure gains. This helps manage risk and allows us to re-enter the market if the price pulls back. The overall portfolio will be 70% focused on the RSI strategy, 20% on Bollinger Bands, and 10% on support and resistance levels, creating a balanced and adaptable approach to maximize returns while mitigating potential losses. This combined strategy aims to capture the ongoing uptrend while incorporating risk management techniques for optimal performance. Based on the historical data and forecast, NEXO shows a generally upward trend with recent price fluctuations. The RSI consistently above 60 indicates bullish momentum, nearing overbought territory at 80. The forecast predicts prices holding steady around $1.3, reinforcing the potential for continued gains. Considering these factors, I propose a long position strategy with an entry price of $1.28. A stop-loss order should be placed just below the support level at $1.27 to protect against potential downturns. The initial target price will be $1.3, aligning with both the resistance level and the forecasted price. To refine the strategy, we'll incorporate Bollinger Bands. The price consistently trading near the upper band suggests continued upward movement. If the price reaches $1.3, we will move the stop loss to the center of the Bollinger Bands, currently around $1.23, securing profits while allowing for further gains. A secondary target price will be set at $1.35, capitalizing on potential breakouts. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on bullish momentum while mitigating risk with well-defined entry, stop loss, and target levels. Based on the historical data and forecast, Pendle exhibits an upward trend. The price has been fluctuating within a range between $3.56 and $4.89, with recent prices nearing the upper resistance level. The RSI consistently stays above 50, indicating a bullish momentum. The forecast suggests continued price increases, reaching $4.39 by May 21, 2025. Considering the RSI, Bollinger Bands, and forecast, I recommend a long position strategy. Specifically, enter a long position at $4.14. Set a stop-loss order at $3.92, just below the recent low and the lower Bollinger Band. The initial target price is $4.31, aligning with the forecasted price for May 21, 2025, and the upper Bollinger Band. If the price reaches $4.31, consider moving the stop loss to the entry price of $4.14 to secure profits and reduce risk. A secondary target price can be set at $4.5, reflecting the resistance level of $4.89. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, KAITO exhibits a clear upward trend, supported by a recent breakout above the resistance level of $1.91. The RSI consistently moved above 50, indicating increasing momentum, and the forecast prices predict continued growth, reaching $1.94. Given this bullish outlook, I recommend a long position strategy focused on capitalizing on the upward momentum. Specifically, enter a long position at $1.67. Place a stop-loss order at $1.57 to limit potential losses if the price reverses. Set a target price at $1.84, aiming to capture a significant portion of the anticipated upward movement. To refine this strategy, we incorporate the Bollinger Bands. The price consistently remained within the bands, indicating periods of consolidation. However, the recent upward movement pushed the price towards the upper band, suggesting a potential for further gains. We will also utilize the RSI indicator. When the RSI falls below 20, indicating an oversold condition, we will initiate a long position. Conversely, when the RSI exceeds 80, indicating an overbought condition, we will consider taking profits or reducing our exposure. Combining these three strategies, the most efficient portfolio would be to enter a long position at $1.67, set a stop-loss at $1.57, and target a profit at $1.84, adjusting the position based on RSI and Bollinger Band signals. Based on the historical data and forecast, Raydium exhibits an overall upward trend, supported by consistently breaching the Bollinger Bands and RSI readings generally above 50, indicating positive momentum. The forecast for the next week projects continued price increases, with values ranging from $3.26 to $3.54. Therefore, I recommend a long position strategy. We will enter a long position at $3.26. The stop-loss should be set just below the recent low, at $3.15 to mitigate potential downside risk. The initial target price will be $3.46, aligning with the forecast high. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we can consider averaging down our position, but given the upward trend, this is unlikely. If the price touches the support level of $2.94, we can consider entering a long position at $2.94 with a stop-loss at $2.83 and a target price of $3.19. This combined approach, leveraging both forecast data and RSI signals, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Quant exhibits a clear uptrend. The price has consistently made higher highs and higher lows, with the forecast predicting continued upward momentum. The RSI values have generally fluctuated above 50, indicating bullish sentiment, though occasionally approaching oversold levels. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Considering the support price of $95.4 and the resistance price of $101, we can implement a strategy that combines RSI, Bollinger Bands, and trend analysis. Our primary strategy will be a momentum-based approach with a focus on breakouts. We will enter a long position at $102 on May 15, 2025, coinciding with the forecast price and the upper Bollinger Band. The stop-loss will be set at $98, slightly below the recent support and the lower Bollinger Band, to limit potential losses. Our initial target price will be $107, aligning with the forecast price for May 21, 2025. If the price reaches $107, we will reevaluate the trend and potentially set a new, higher target price. This strategy aims to capitalize on the anticipated upward movement while managing risk through strategic stop-loss placement. Based on the historical data and forecast, TRON shows an upward trend with consistent price increases. The RSI indicates that TRON is approaching the overbought level, currently at 71.7, suggesting a potential pullback or consolidation. However, the forecast prices predict continued growth, reaching $0.286. Considering the support price of $0.257 and resistance price of $0.298, I recommend a long position strategy. Entry price will be $0.273, with a stop-loss at $0.265 to protect against a potential pullback. The target price will be $0.286, aligning with the forecast and resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is nearing the upper band, which often signals a potential reversal. Therefore, we will implement a slightly conservative approach. The entry price remains $0.273, but the stop loss is adjusted to $0.268, just below the lower Bollinger Band. The target price is set at $0.283, a more achievable target considering the potential for a short-term consolidation. This combined strategy leverages the upward trend, RSI readings, and Bollinger Bands to maximize potential returns while mitigating risk. Based on the historical data and forecast, Pudgy Penguins exhibits an overall upward trend with increasing prices. The RSI consistently remains above 60, indicating bullish momentum, though it has approached overbought levels recently. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The support price of $0.0104 provides a baseline, while the resistance price of $0.0151 has been tested multiple times. The forecast for the next week predicts continued upward movement, with prices expected to reach $0.0154. Therefore, I recommend a long position strategy to capitalize on this bullish trend. My strategy involves entering a long position at $0.0146, coinciding with the initial forecast price and a recent price point. A stop-loss order should be placed at $0.0137, just below the recent support level and within the lower Bollinger Band to mitigate potential losses. The target price is set at $0.0154, aligning with the forecast high for the week. This strategy leverages the upward momentum indicated by the RSI and Bollinger Bands, while incorporating support and resistance levels for risk management. The potential profit is substantial, given the current trend and forecast, while the stop-loss protects against unexpected downturns. Based on the historical data and forecast, Axie Infinity exhibits an upward trend. The price has consistently recovered from the support level of $3.35 and approached the resistance level of $3.59. The RSI values have been fluctuating, but recently crossed above 70, indicating an overbought condition. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a strategy that combines a short-term pullback trade with a longer-term bullish position. First, initiate a short position at $3.42. Set a stop-loss at $3.5 to protect against a potential breakout above the resistance. Target a profit at $3.3, capitalizing on the anticipated pullback towards the center of the Bollinger Bands. Simultaneously, prepare to enter a long position at $3.15, coinciding with the first day of the forecast. Place a stop-loss at $3.05 and target a profit at $3.4, leveraging the expected upward trend. This dual strategy allows us to benefit from both short-term volatility and the overall bullish momentum, optimizing returns while managing risk. Based on the historical data and forecast, AMP shows a generally upward trend, although with some volatility. The RSI fluctuates, but recently climbed above 70, indicating overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I recommend a long position strategy with a focus on short-term gains. The entry price will be $0.00468, coinciding with the first day of the forecast. A stop-loss order should be placed at $0.00442, just below the support price, to limit potential losses. The initial target price is $0.00488, aligning with the forecast price and a reasonable profit margin. To refine the strategy, I suggest incorporating the RSI and Bollinger Bands. When the RSI falls below 30, consider entering a long position. Conversely, when the RSI exceeds 70, consider exiting the position. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price breaks above the upper Bollinger Band, it suggests a possible exit point. Combining these indicators with the support and resistance levels will create a robust and adaptable trading strategy. The final target price will be $0.00498, maximizing potential returns.